Hey, good morning. Forex. Morning, Forex traders. How you doing? This is your daily Forex trading strategy session brought to you by Forex.Today, sponsored by Traders Way. Let's go. Boom! So good morning, Forex traders. How you doing? Today we're going to do dollar. Why? The dollar's strong. Euro. Why? The euro's strong. Swissy. Why? The Swissy's strong. Yen. Why? The yen is strong. Huh. Why? So what does that smell like? Smells like risk off to me. But we've been in that for a while. Nothing's really moving that terribly. So maybe it's just a pause. I still think we're kind of building up for something, but we'll see. So we had a trade war and all that kind of stuff, yada, 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 yada. The fact is, if you're in Switzerland, nobody's trading. So, we're probably making a mountain out of a molehill, but whatever. Our job is to sit down, shut up, and get on with the next trade. So that's what we'll do. Please ask questions. Please get involved. Please be kind and respectful to everybody else in the chat because this is our office. This is a professional meeting. If you are new to these webinars, please subscribe. If you're watching a recording of this video, then you are required by law and your mother's good teachings to leave a comment. You can say what currency pair you want me to cover in the future. You can ask me about a particular topic, but a lot of people just say hi, thanks, what up? All of that is valid, so please leave a comment if you're watching a recording. Oh, and to everyone who else is new to these, if you look in the video description below, you can download all my chart templates for free. Compliments of the firm. The tools that I've been using for 15 years or something, boom, all yours for free. And imagine, also included in those free templates are the indicators and the leading and lagging indicators that I use and the profiles and stuff. But the 1,000 things that I found didn't work, they're also not included, right? I am not including the 1,000 things that I found didn't work. So imagine that. So anyways, but by the way, my name is Wayne McDonald. I am the Chief FX Market Strategist for TradersWay.com. So feel free to ask me questions and get involved in today's webinar. One day when you have the confidence and skills you need to trade real money, at that point, I hope out of the respect I've earned by delivering these webinars every single day to you, you choose Traders Way as the prime brokerage to your new successful Forex trading business. So I look at it as investing all my energy and time into you up front to help you become a success, and you pay that back by choosing Traders Way as your broker. Fair deal? Fair deal. Coolios. Let me remind you that trading's risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results, but please stay small, stay humble, focus on the long term, and never, ever, ever risk money you cannot afford to lose. Pachow! You know what my wife said the other day? Pachow! I'm like, oh, no, you didn't. Oh, and by the way, I had this aha moment. So my son, both my son and daughter, they're geniuses. There's no other way to say it. So anyways, they went to a summer camp this year. The only people that are allowed to even apply are the ones that are in the top 5% of students in their grade for the entire United States. That's the basic minimum requirement, right? And so they applied to this thing. They go off for a week, and it's a big group of kids on a college campus, but they're all young, right? And their goal, they get broken off into different groups with different skill sets, and there's a mock pandemic, and their job is to save the world. And it goes from first responders to government systems and all that kind of stuff. And my son worked on the finance side of this, right? Because he didn't want to choose, and I don't want to choose, and I don't want to, all right, I'll choose. Boom, you're going into finance. So anyway, so he goes to this thing, and he's learning about economics and budgeting and currencies and stuff. So he's been asking a lot of questions about currencies and central banking and different forms of government and different forms of economies. That's Papa's business, right? So anyways, so yesterday we were going back and forth on currencies, and he's like, well, what about this and what about that? So we're going over the Big Mac index and stuff like that, and purchasing power parity between two different currencies. And so if you're from Sweden and you go to Beijing to buy a Big Mac, it's 75 cents to them, which is super cheap because one currency is weak and the other is strong. And if you're Chinese and you leave Beijing and you go to Stockholm, you're like, oh my God, it's like $25 for a Big Mac in local money, right? So we're talking about all that kind of stuff. And I said, you know what? I should give you a trading account, right? I'll put money in it or fake money in it, and you can trade $50,000. And we'll see if you can carry this out and make money. And his eyes just went boom. How does that feel as a parent and as a currency trader, where he's like, I would love that account? I'm like, yeah, baby. So game on. We might have a kick butt, super bright. He's in the gifted program for not just for everything, but then he's in the super gifted program for math, which is great, huh? Can you imagine? Take a math brain and an engineering brain, give him a Harvard undergrad degree, give him an MIT master's degree, and then throw him into trading? Holy smokes, this is going to be good. So anyways, true story. Arnold says, I don't know how to pronounce your first name. Actually, that reminds me of Axel Foley. Actually, Arnold says, hello, Wayne and everyone. I've been watching these webinars for quite some time. It's my first time to comment. I must say your webinars are very helpful. Smiley face, heart, heart. Smiley face, heart, heart, back to you. So, yeah, thank you for coming every day. Thank you for the loyalty and respect you show me every day. So anyways, sorry for wearing a hat. Sorry for wearing a hat, but anyways. So, yeah, one thing I want to cover, here's this index I'm going to include in the new version of the download. Sideways, some down, some up, some straight down. Ooh, might want to look at selling some Kiwi. Swissy up? Okay. Look at this. CAD, I would say, in this time period is quite weak, and Kiwi quite weak. So we should probably focus on them, right? Okay, cool. So we'll look at CAD. Well, you know what I wanted to do first? I wanted to follow up with that scalp. You guys remember that scalp from yesterday on the 1 minute chart? Oh. Okay, you guys remember? This was a 4-hour 21. We planned it all out. So it had been up for hours. Been up for like 12 hours, something like that. You ready for it? We had a triple top on a 4-hour 21, right? This was a sell right in here. You guys remember that? Check that out. Down, 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 down. No. Whoa. Holy smokes. That's amazing. Okay. Do you guys remember what to do now? This is a guide. Remember, it doesn't give you the exact price, but it's a guide. It's straight out of the price action course, by the way. Oh! Oh! So you do it again. Okay. Remember, it's just a guide. Okay. Now, usually I have space to the right. You'll see why I put space to the right on the charts, because it allows me to drag this farther right. But anyways. Oh, what? You crazy. I liked you. You crazy. So once again, new lower low, drag it across. Once again, it's just a guide. And oh, whoa, 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 whoa. So you can see somewhere in here you would have got knocked out. Typically, it's a breach of the 21. Okay. But let's say if it continues again. Oh, 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 oh. Okay. But what happens here? So remember on a 15-minute chart, what just happened? Up to the 55. So even though it dropped like a ton of bricks off the old roll reversal, what this does, it's a big red flag to say the end is near. Okay? Shug says, thank you so much, Wayne, for accompanying us and still keep so much energy and passion. Been a long time with you. Yes. Thank you, Shug. For me, he says, I've been working hard lately. Well, when have I not, really? So anyways, thank you, guys. So this pullback, when you get this up, 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 that should be a red flag. I mean, especially higher than this high and all the way to that high. So at some point, you would have been knocked out of the first scalp. Like there's one scalp here, second scalp here, third scalp here. This should be a shields up red alert. And it also predicts a bottom coming up, right? And again, if you've taken the free video course, youtube.com/epicsbootcamp, you know that it's the 55 that I'm talking about. And so it made a lower low, but I'm nervous. Okay, and you can see we go right back in. So I probably would have skipped all of this to the right. I might have taken this here, but I don't know. That's a lot of price action. Now, if you change it to a 5-minute, you probably get different reactions. If you change it to a 15-minute, you'll get different reactions, because on a 15-minute, this big noise here is really just part of, like, here's one move, right? Right? And on a 15-minute chart, it's just a big candle. But nonetheless, what's happening is, this, what I call a frequency. So again, like an oscillator measures frequency. What happens is I see things going like this, right? Or actually drawn more properly, it'd be like, right? So whatever, right in here, there's a lot of stuff to say, back out, you might be on the wrong time frame. Because remember, all this starts on the 4-hour, right? 4-hour 21, like I showed. And you want to scalp down, perfect. That's what you'd expect to happen on a 4-hour. Pull back, that's perfect price action. You'd expect this, great. Pull back, you'd trade that. This, up, stop, stop, stop. Because the thing is, what I found over, not just years, but almost 2 decades now, is that trade plans work best when you put them in the right market conditions, but market conditions change. So if you get 2 or 3 or 4 in a row, and it's not that you got 2 or 3 or 4 in a row, it's that all of a sudden you see something different. So like, right? Down, 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 up, up, sell off that resistance, you'd expect that. Down, 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 up, up, sell off resistance, you'd expect that. Down, 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 up, up, you'd expect to sell at resistance, but it cleared through. So you get knocked out, you got 2 or 3 winners there, but because you're up to the 55 and then down to here and then back up, this change, which is different than this, right? The market conditions have changed and you should stop scalping. Go back to intraday trading or day trading or whatever. But your scalping opportunity has come and gone. And the reason this is another reason why you need to plan ahead, because if you don't plan ahead and you're not ready here, remember, we were ready here before it even started falling. Aha! The key to success, right? So therefore you were ready here, and therefore you were ready here, and therefore you were ready here, but didn't get it, okay? Versus if you saw all this happen and then you started scalping here, right? And it went up, maybe knocked you out, then it came, right? So then it came down, you bought it here, came down, knocked you out. So then, so then you sold here, then it went up and knocked you out. So then you're right. And then you just give up. Because, right, if you end up, anyways, you get it. So anyways, that's just a follow up on yesterday's scalp. You should know when to hold it and know when to fold them. Okay. Let's go to that kitty cat. Well, let's preface the kitty cat with oil first. Oh, I didn't want this one, did I? No. Oil. Where's that energy complex? Energy complex. Andrew wants to know if I think Forex is past the golden years. Absolutely not. The reason for it is a market that has existed since Sumer. Remember the Sumerians? Money is used for trade. So even if Bitcoin or something turns into the next thing, that's fine. It's still going to be something that we trade across borders, right? As long as there's two currencies or more, Andrew, we will have a foreign exchange market. So it's not like a new fad. Okay, it's not a new fad at all. It goes back not just hundreds of years, thousands of years. Okay. So the Sumerians, I mean, money goes back even farther than the Sumerians, for example. But if you think of what happened in Sumer, they used gold to trade back and forth, but it became expensive let's say dangerous. It became dangerous to carry gold around, right? Yes, as in Sumerians, right? So anyways, gold, it was dangerous to carry gold because someone could just take your gold, right? And you didn't want to leave it at home because people could break into your house and steal your gold. And just like cash, once someone is holding the cash, it's whoever is holding the cash or holding the gold bar, right? Your name isn't on it. It's a bearer bond, so to speak. Whoever is bearing it, whoever is carrying it, owns the gold, owns the dollar. So someone could just break in, kill you, your wife, and your children, and take your gold, and now it's their gold. Okay? So it got very dangerous to use gold as money. So they started paying people to protect their gold. Okay? So they put it into they gave it to a business that promised to protect it, and they provided security and all that kind of stuff. And so they would go and put the gold in this safety warehouse. And the warehouse would then give them a piece of paper to say, your gold is here. Here's how much gold you have. So it became an instrument. And by the way, banking works this way now. But anyway, so they have this instrument. By instrument, I mean a piece of paper that says it is worth the same value of that gold. So someone could then go to a store and say, well, how much does that table cost? And they say, oh, well, 2 pieces of gold. Oh, or in this case, it'd be like 2 ounces of gold. Okay, great. Well, I have 2,000 ounces of gold in my vault. I will give you a piece of paper that says you own that. And so anyways, they would go to the bank and show the piece of paper, and everything would be adjusted. So some gold went from this shelf to that shelf to go from one person. Now, some of that gold went over to the other shelf that belonged to the table business owner, right? And all of a sudden, people started realizing you don't actually carry your gold around, you carry the paper around, and you start trading the paper. And the banks are the ones that keep track. Okay, 2 ounces of gold goes here, so this, right? This quantity of gold goes down, this quantity of gold goes up. Okay, we'll keep track of this on paper. And this started happening for quite some time. And then these bankers, the vault owners, realized nobody actually shows up to look at the gold, to touch the gold, to withdraw the gold. Nobody ever shows up. They just were basically accountants sitting on other people's gold. So one day someone comes along and says, I'd like to borrow some gold. Okay, well, we'll lend you some of this gold that doesn't belong to the bank. It belongs to other people. We will lend it to you because no one is actually using it. So we'll lend you some of their money, but you got to pay it back, and you got to pay us back on interest because they have to pay back the original people, and then they get to collect the interest. So now the bank started making money. Aha! The banks started making money by lending out other people's gold to borrowers. And it got to be a very good business, and that's where banking started. So when will Forex go away? Well, if you take that kind of how banking works, how business works, and then how money works, trading between economies, the answer is, Forex will be here as long as there's more than one currency. Maybe one day we'll get to a point where it's one global currency, but actually there's not a lot of benefit to that. And that has to do with capitalism. Okay, if we're all communist, socialist pig dogs, we'd have one currency because we'd all be broke anyway, so it wouldn't matter. And we'd go back to like, when you get married, I will give you 12 goats because you're such a good friend. And if you marry my daughter, you owe me at least 27 camels because she's a catch. Okay, and we'll go back to that. What was I doing? Oh, I know. Ding, ding, ding. Ding, 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 ding. Andrew says, what will day traders or retail traders ever be closed out? No, because we provide liquidity and we don't affect them at all. At all. None. We're not interesting. So like if you look at the Commitment of Traders report, which I reviewed yesterday in yesterday's webinar, it talked about large institutional speculators and large institutional hedgers. And then what's left over is us. But we're such a small rounding error that, all we provide is liquidity, but we don't even change the price. So we offer nothing but good and no bad.
So in a minute to the July CPI data for the U.S. CPI month-over-month expected 0.3%, ex-food and energy expected 0.2%, year-over-year CPI expected 1.7%, core expected 2.1%. Look at July CPI data in just a few seconds. Headline year-over-year CPI expected 1.7%, core expected 2.1%.
Is that right, Raymond? Trade one cow for another?
CPI 1.8% is 1/10 higher than expected. Core 2.2%, also 1/10 higher than expected.
Right.
Month-over-month 0.3% is in line with expectation. The core at 0.3%, 1/10 higher than expected.
What's the year-over-year?
Earnings at 1.3% is down from 1.5% prior. Weekly earnings at 0.8%, down 0.4 from the prior.
Okay, looking at year-over-year 1.8 versus 1.7. All right, of course, we want that above 2.0, right?
The rates continue to move higher here following the CPI prints.
continued dollar strength or at least CAD weakness. So anyways, I wanted to go back to oil. Sorry, I got distracted there. Someone asked about Forex. So as you can see, I've studied the economic system and the Forex system going back thousands of years. So if you're ever at a cocktail party and you say, well, that reminds me, did you know the Sumerians came up with the fractional banking system? They're like, what? Yeah, the Sumerians in Sumer. It started out with carrying around gold. It was too dangerous.
The dollar firming up marginally here following the higher than expected prints for CPI. The euro 112.13 back into negative territory. Dollar yen 105.32, fractionally higher.
So the idea here is the CPI is a little higher than expected. So there's less likelihood that the Fed needs to cut interest rates. That's the thought process. But the Fed isn't cutting interest rates because of economic conditions. They're doing it for other reasons. So, but that's the idea anyway. So a higher CPI in this case means less cuts. Chris, obviously I'd be biased, so you're asking the wrong person. But I'd say half the people in the webinar right now are clients of Traders Way. So that's probably the better. All right, so let's see. So I'm using this as sort of as a bellwether here. You are not alone. So this is where you'd expect some downward movement, obviously. Hey guys, if you're new, make sure you subscribe, okay? This way you get notifications. If YouTube doesn't notify you very well or very consistently, please visit twitter.com/FXBootcamp. I tweet, every time I start the webinar, I tweet the link. I mean instantly, so you'll just be brought right in. And then when I post a video, most of the time I tweet that, but not all the time. Most of the time I do. So this could be a change in direction if you're looking for a short-term scalp here. So there's the top. Now you got to mark this, and you should mark the other one. So it looks like a 21.4 and a 382. The top side here I'm just marking to indicate that it's an obvious like double top. Okay. So let me go back into like a 5-minute chart. So there you go. So there's an aggressive plan A. Aggressive meaning usually you don't kick off at 21.4, but sometimes on the smaller time frames you do. Plan B for a scalp is this one. Okay, if you're a bear. I don't know if you scalp oil or not, but that's the thought process anyways. So if the dollar goes up based on the high CPI, the valuation should get stronger, and $1 buys more oil than it used to. Therefore, the relative price of oil has fallen. Therefore, this comes down. That's the thought process, if you will. Now I'm going to look around. see what's going on. Hang on. So Euro Swissy is coming up to a monthly S2. Looks like CAD and Aussie Yen might be still trying to find a bottom. I think that's going to be very next week. Okay. And that's the benefit of having a lot of screens. I might get heckled all the time, but when I can just look up and see things, that means I don't have to switch charts. I don't have to, what does it look like on a 4 hour? What does it look like on a 15? What does it look like on a 5? I just look. I say, oh, look at that. I can make decisions in just a second. Well, if that's going up, what's that doing? Oh, yeah, well, that makes sense. Well, hey, that one's weird. Look at that one right there. I should probably drill in. That's why I have so many screens. I find them helpful. Yeah, I don't actually have them in a way that I really prefer. But yeah, back when I had the 18 individual screens, I had them organized per currency, but multiple time frames. And I just don't have it quite set up that way. And I'm trying to find a sort of a new way. I haven't reorganized them. I mean, yeah, there's some yen pairs on one side and some dollar pairs on the other and some exotics and some commodities. And yeah, there's somewhat, but I'm not happy enough to really, like, there's no need for sort of a walkthrough. But what I'm thinking of doing is adding one more screen and doing a row of 3 on the bottom and a row of 3 at the top instead of 5 across. Right, so go back to landscape. 6 landscape versus 5 portrait. Jay Millsberg says, you don't use any indicators, Uncle Wayne? I'm not sure what you mean. There's definitely indicators on this chart. Thank you, Sniper. I appreciate that. Do I ever trade on Bloomberg Terminal? No, I have not. I almost took a class, but no. Do I run them off all one PC? Yes. Do I have multiple MT4s open? Not on this setup, but typically I do, but not in that setup. So what I used to do is I'd have all those open, right, on 1 or 2 or actually 3 different trading platforms. And then I'd have one trading platform in front of me, which I would manipulate as one, let's say normal sized MT4, and I would just trade off of that. So I could look around on those platforms and then trade on this platform. What I've been doing is, sort of a back and forth. I don't know why. Since I moved into this new office, I just, maybe it's school or something, but for some reason I've avoided to get too comfortable. So I do some trading here, I do some trading there, back and forth. And I don't know, it's like a weird interim space for me. And I don't know why, because it's all custom made. Right, I custom made this office. So I don't know. It's weird, actually. I should think about it. I guess because I probably feel like if I get too comfortable trading, I'll never stop and I'll do bad at school. So I kind of go back and forth, right? So that's how I do trade, though, where I'll have that open. I do have multiple platforms on there, but you should dedicate one, let's say 1080p space, because these are all 4K behind me. You should have one normal platform just for flipping through, just like this. Basically, I would trade with this, right? So I would say, so I look around and say, I want to sell Kiwi yen, for example, let's say. So I get that looking on the big screens, and then I drop into this, and I start setting up trades. So that's how I do it. But it's one PC, and it has, I think it has 64 gigs of RAM. And I think it has 16 processors. And I have one sitting on the floor, actually. It's 32 gigs of RAM. And it runs, I think, 16 screens. It's my backup. That one right there, I think it's an 8-core, it's an HP, 8-core, 32 gig machine that I'm not using, and it runs 16 screens, and it's just sitting there. I think what I'm going to do is plug it in. So this is, I'm running on a laptop with an external monitor. I've had a couple of problems with this PC lately, so I think what I'll do is I'll get rid of the laptop. Of course, I've avoided it because I don't want to reload the charts and all that kind of stuff, but I'm going to have to. Get rid of that, put that machine I'm not using, put it into my desk, which is a beautiful mahogany desk, but it's got USB ports and power built into it. Really cool desk. And start running the webinars off that machine. Prince Philip says, behind me is one screen. The issue is not the number of screens. So like I used to run 18 screens on one computer. Nice computer, right? The problem with my setup here, I guess I should put my hat back on. The problem technically with this setup, so whatever, I'll leave it. The problem with this setup is it's 5 screens that are 4K. The issue is the 4K. You can get a machine that'll run one 4K screen. Maybe you'll even get one too, with 2 screens. Running 5 is a real problem. So this one, so the reason I don't run that one is it'll run, I think, 2 4K screens and 16 1080p screens. But that wasn't good enough. But technically you can't run 5. So that machine behind me had to be custom made. And you need a custom monitor, a custom motherboard and a custom few other things. You got to have the right video cards that will be compatible with each other and create a bridge and all this kind of stuff. So, and it takes I don't know, whatever. So, and then I just put in more RAM stuff because RAM's cheap, right? So that's the issue, is that they're all 4K. It sounds like you should just be able to do it, but walk into Best Buy and say, you need a computer that will run 6 4K screens. And they're like, but what? Right? So yeah, I want a computer and I want to run 6 4K computer screens. Dumbass, so what? Dumbass, say what? Dumbass, so what? So anyways. Prince. Yeah, RJ. Yeah, well, I lived in the Bay Area for 20 years, so yeah, I know fries. So anyways, cool, right? So the next thing is up, 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 down, right? So that's the next move. Whoop. Easy peasy lemon squeezy. Not a problem. That's a breakout roll reversal. Return to the scene of the crime trade. Yeah, and I have that too, but I mean, yeah, so when I travel on the road, I bring my computer. Yeah, that's great. I mean, it's totally fine, right? But then, like, if I'm trading, I like to watch YouTube videos or play music in the background, right? So I get a second monitor. And then if you're going to have 2 monitors, you might have 3 monitors, right? So typically my laptop, I have 3 screens. Why? Well, one I could be running music, one I could have my email open, and the third one I'm trading. And I do that with studying too, right? 1, I got my paper open. 2, I got my research notes. 3, on this third screen, I got the web open or my email or something, right? So I got multiple screens. But if I'm at home and I got the space, I don't want to switch between profiles. Okay, what's the Kiwi yen doing? Great, so now what's the Kiwi dollar doing? Should I look at this? So you load this up. Okay, what's it doing on the 4 hour? Okay, well, it's coming up to a double bottom and it's coming up to an M2. Okay, so I guess maybe I should take a look at the 5 minute and look for signs of it heading back up, right? I don't want to do all that. So that's why when I'm at home, I do this. Ready? I'm looking at Kiwi yen. Now I'm going to look at Kiwi dollar. Okay. Right? Like, that's what I prefer. This is Kiwi dollar. All right. So now that we have Kiwi dollar open, what does this tell you? Stop selling! Okay. So here's the cool thing, right? Here's the cool thing. This is a sell zone, and this is a sell zone. This was a sell zone. So this one never really worked out. This one did. This one did. Nice. Okay. There's not going to be a lot of meat on the bone. You're probably not going to get another short trade until Asia. Okay. Now on this time frame, this also says stop. Stop. Okay. So let's put all this together. What did we just learn? My day trading chart says stop. My month swing says stop. So what should I do? Help a brother out. Should I keep trading? Yeah, it says 6 monitors, 27. Yeah. Totally. I just threw 6 in the garbage. And one of the saddest things I've done recently is I went to the garbage dump and I took my very first 6 screen array that I bought in probably the 2001, and I threw it in the garbage. And then I took this 1 screen, 2 screens, 3 screens, 4 screens, 5 screens, 6 screens, 7 screens, 8 screens, 9 screens, 10 screens, 11 screens, 12 screens, 13 screens, 14 screens, 15 screens, 16 screens, 17 screens, 18 screens, all into the recycle bin at the garbage dump. You should have seen the look on people's faces, like, what the? All right. So, anyways, cool. So, yeah, this says move on, right? Cool. We can do CAD across the board. Yeah, and it's more of an eye burner. Because the other thing, too, and so, like, what I lean back, right? So I get here. And I'm like this. Check it out. I'm practically laying down. It's like a first class seat on an airplane. And I got my feet up. And I can look here, I can look here, I can look here. My head is completely supported. Isn't that neat? Right? So here's my sitting position. Oops. Right? So now I can look this way, I can look that way, I can watch TV up here. I often listen to music. It's nothing. It's actually very, very, very comfortable. And then with these webinars, I got to move my seat. Oops. Hang on. There we go. So I sit up. Mbusa says, Wayne, are you not expecting a lower low? It doesn't matter. I'm at a daily stop trading. I'm on a monthly stop trading, so I'm going to stop trading. That's it. Okay? That's it. There's nothing else to it. Well, what if it, I don't care. But what if it, I don't care. But, I don't care. Okay? Right? So you have to realize I'm not looking for trades. I'm looking for easy money. I listen to everything, Joey. From classical to big band to heavy metal to hip hop and rap to, did I say heavy metal? To grunge, to punk. Did I say jazz? Opera. Everything. How do I compensate the fundamentals? Well, I'm not sure what you mean by that, but everything starts with my fundamental bias. Okay? So I have an opinion on everything. Okay, Ali? Yeah, I love Metallica. So everything, Ali, starts with a fundamental bias based on macroeconomic conditions and the corresponding central banking policies. There's also business cycles and seasonal cycles, right, and that kind of stuff. Okay? All of that gets put in. And I start with that first and foremost. Then, Ali, I look at the market conditions as described by technical analysis. And I say, do we have congruency? Which means if I'm a bear, are market conditions bearish for that currency? If they are, trade like a mofo. If they're not, don't trade at all. So yes, so Kiwi's bearish, correct. So what you would do then is isolate it today And oh, I don't have a Kiwi. So let me show you how to do this. Ready? Let's open up Euro. Okay. So let's do this. We're going to make a Kiwi scan. Kiwi yen, Kiwi dollar, Kiwi Swissy, and Kiwi CAD. Cool. That's enough, right? Great. So now we will rename this profiles, save as. We will call this scan NZD. And we have now created a profile. So I look at this and I want to look, again, for congruency. I have to check the numerator and denominator. So we got numerator, 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 numerator. Great. So if we have congruency, they should all be down. And if they're all down but at different rates, then we know the strength or weakness of the opposite currencies in the denominator. If some are up or some are down, then we know the Kiwi is neutral. So I look at this and they all seem down. Cool. I look at this and it seems quite a bit down. Well, check the time, 4 hour, 4 hour, 4 hour, 4 hour. Okay, quite a bit down, moderately down, but at support. Very much down like this. So these two, okay, and this. So here's what I get. Kiwi is weak across the board. Okay. Yen is quite strong. Swissy is quite strong. Dollar is quite strong, but not as strong as these two. And lastly, CAD is also weak. CAD and Kiwi are weak. Swissy is strong. Yen is strong. Dollar is slightly strong. Done. That should take me less than, I'll say 2 seconds. Okay? That's called a relative strength exercise. So now I know I should probably be in the business of selling Kiwi and selling CAD. And I should probably be selling Kiwi Yen, selling Kiwi Swissy, and maybe even selling some Kiwi dollar. But the Kiwi dollar, it'll be moderately successful, but I'll probably pick up some pips. Then I probably want to sell CAD Yen, CAD Swissy, and probably buy a little bit of USD CAD, but expect just a small profit. Okay? Small profit, medium profit, large profit, for example. See? And I can do all that in 2 seconds. Okay? So this says Kiwi is weak, that confirms. Swissy is strong, that confirms. CAD is weak, that confirms. And Yen is moderate. I don't trust this Yen one, so we should be careful. Okay. And dollar index, it's not that strong. So very cool, right? I look at this and I see one thing. Going back to the Kiwi profile I created, I trust my analysis. I don't like using tools. I like this. It just tells me everything. Boom. I know my own algorithm inside my head. Okay. Elise, is my question, why do you ignore when the break of S2 monthly? No, I don't ignore it. I just don't buy it. I can only sell it. Okay? Okay? So in my book, Ali, I call it a moo trade. And I suppose you'd have to read the book to find out why. I don't sell it because it's below there. I just cannot buy it. There's a big difference. I don't sell it because it does that. Because I can't imagine waiting that long to get on the clue train and then trading. I'd rather you do nothing at that point. But if you got 9 trades on it that are profitable already and you're laughing, squeeze a couple of more in. Okay. So like on gold, okay, do you remember this one, guys? On gold, our plan was you cannot sell, but we were going to buy it off this 4-hour 21. Can anybody confirm that? This goes back to, I think, Monday's webinar. No, it's not bad. It's no, it's not bad. It just is. It's new information. Okay. So lots of people confirming. Thank you, guys. Okay. And remember, this was a buy as well, based on this higher high. So our first setup was buy here, right? That was 3 weeks ago. And then on Monday, our buy was here. If you're a swing trader, there's a buy here. So whatever. There's a weekly swing. There's a monthly swing. This is just a breakout roll reversal. Okay, actually, do you remember I call it an OOP? OOP, yeah, you know me. Down with OOP, yeah, you know me. Down with OOP, right? You guys remember singing that? Maybe that's a good trigger. So I try to place anchors when I teach you stuff. So if you remember that, this is an out of position swing trade for the week. So it's a out of position weekly. And if you remember, the target is right here. Okay. So we had it down into here, right? Down to the 4-hour 21 to the target. So where are my swing traders? How many people can confirm that in the swing trading course, that is what you're taught when you're out of position on a weekly swing trade, you kick off the 21 and you target the M4. And then if you hit M4 quickly, you would expect a counter trend trade. So you know to buy here, exit here, and maybe even sell back around the other way. So the thing is, if you're learning all of this now for the first time, you're depriving yourself of your success. And you probably need to take courses at FX Bootcamp. Because you're just going blind. If you don't know those things, like, oh my God, then how do you trade consistently? Right? Raymond's like, yes, sir, all day long. Like, dude, you just need to know this stuff. It's just how to trade, that's all, right? I know I sound facetious, and I probably am being, but I don't know what I need to do to, right? So if, like 2 days ago, I said, hey, man, in the swing trading course, it says this is an out-of-position trade. You should buy it off the 21 and target here. And then 3 days goes by, and it does that, and you still don't do it, then maybe you need the training course. That's all I'm saying. Julie, yeah, Julie. So anyways, cool. Pip's fish in the canoe, right? Anyways. Lots of things not working out here. This is interesting how this followed the channel perfectly, huh? We had, right, resistance here, support here, resumption of trade. If you remember, this is a monthly swing. So let me clear this up. Monthly swing. We're through the target though. Okay. So that's just how it goes. And then this is maybe we have to wait 2 weeks for the next trade. But if you want to look at sort of the rules of engagement for this one now, you probably don't want to be on a day chart. Probably want to be on a smaller time frame. Okay, so it's already done the first one. So this is called a breakout. So once it breaks out, you trade the role reversal. Notice like we did on price action, here's your guide. So it looks like it's all there. And you take this short. So the next one now, here's your guide. So you're going to short the next one and come back down. But under these rules of engagement, you're not allowed to buy. Okay, that's it. And you're only allowed to short if it, like in this case, stays below this sort of area. It's a bit of a range, right? So if you don't like drawing like the little things that I draw, if you don't like doing it that way, then just use a fib. That's what Fibonacci is for. So that guide is somewhere between, right, the 382 and 618. You can see it ends up being the exact same thing as I draw, but it doesn't matter. So now you're like, here's your general plan. You think it's going to rise. Oops. You think it's going to rise to somewhere around here. And then at that point, you're going to look to sell. Okay. Okay, that's called a trade plan. That's on a 1 hour. So now you got the trade plan done. Drop into a 5-minute if you want. Looks like it might go up for an hour and then down for 2, something like that. Yeah, FX Focus is talking about euro dollar or dollar yen. I don't have it at a support really. It's hanging out there, so kind of going to ignore it. Okay, kind of go ignore it. So since we talk about the yen and the Swissy being key indicators of risk on and risk off, you might want to use the Euro Swissy to say if Euro Swissy is going to go up, then USD yen will go up. I know that's a hard stretch to imagine, but go with it. So then we watch this one to indicate the other. And this is what I blurted out earlier, that we're now at the bottom here. Okay. So that's another benefit of having all these screens. I can just look up and say, oh, look, Euro Swissy at the 4-hour week monthly S2 versus having to cycle through a bunch of charts looking for that. I already knew, right? I can just look and go, oh, look at that. Ooh, look at Euro Swissy. That's interesting. And if Euro Swissy goes up, I bet you all the yen pairs are going up. Okay, so I wonder what USD yen's doing. And I just look over there. Oh, an Aussie yen, and pound yen, and Kiwi yen, CAD yen. Oh, wow. Well, they're all a little different, but if this goes, it might be the start of something beautiful, right? And that all takes me 1-2 seconds. So anyways, notice the confluence of both weekly and monthly support. Now this is, when you're selling this, the markets are generally bad, okay? Money is leaving Frankfurt and going to Zurich, okay? So we have the consolidation, breakout, pullback, sell, down, 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 up, up, roll reversal, sell, down, 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 up, up, roll reversal, sell, down, 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 obvious support, times 2. So you definitely take some profit. You stop selling. If you have discipline, you stop selling. And then what? You look for signs that it's changing direction. A double bottom, higher high, higher low would all be really nice. And if it does that pink stuff there, you'll probably get dollar yen that looks like this will probably start looking like this. Right? Aussie yen probably do this. Okay? And so if this does that, right? If this happens, then I'll probably have 5 other trades, maybe 10 other trades based on what's happening on Euro Swissy. Okay? Has everyone subscribed? Has everyone done the thumbs up? Huh? Crazy, huh? Look at that. Just crazy moves. This is just extraordinarily bearish. Just extraordinary. You don't see that very often. Just absolute extraordinary. Look at that. Just riding the 5 on a 4-hour. Just beautiful. And then doing it again. Just crazy, beautiful stuff. Okay. So WWWD, what would Wayne do? That's what I'm doing tomorrow. You're welcome. See how nice it is to be able to plan? Simplifies everything. So I got to watch oil. Of course, I want it to go up, but that's not analysis. Gold, Oscar Mike. Yeah, it'd be great if we got a reversal of fate next week. That'd be perfect. Well, other than the psychological barrier of what does 100 yen mean? It's just psychological. Okay. So I already have all this marked out right here. Oops. But what is 100? How does that affect things? Does it? Well, let's see. So 100 is here. Chop, 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 chop. Chop, 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 chop. And then chop near the 100 because of the 100. So I'd imagine it would go down. It would go chop, 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 chop. And then either go up or either go down. Excuse me. Okay. So, like, doesn't matter. I remember, I think it was even lower than that. Let me add some more time. I remember talking at boot camp about buying yen pairs and putting them in my will for my children. I thought it was lower than this, but it must have been around 75. You can see we were there for like a year. Like, not complicated, right? So we were talking in here, and I'm like, you should buy the Aussie yen, the Kiwi yen, the everything yen. You should just buy everything, move your stop to break even, and then put them in your will and give them to your children. I don't know if any of you guys were here for that. But that was back in 2012, 2011. I'm like, you literally put it in your will, give it to your children because you are never going to get out of the trades. You will collect interest every day forever. So we're at 100. Well, you know what? It used to be 75. So, like, what do I care? But I can tell you, based on past performance, which does not predict future results, that there will be some chop between 95 and 105, let's say. It'll go up, it'll go down, it'll go down, it'll go up, it'll go up, it'll go down, it'll go down, it'll go up, it'll go up, and it might do that for a year or two. This is the beginning of 2011. This is the end of 2012. It was 2 years. 2 years. I know, right? Okay, so how many did it do? All right, so we'll go back to 2012. This is when I think I started the swing trading group around here. So right around here, I look to become a buyer. These are daily candles. Each of these are daily candles. I look to become a buyer around here. I look to become, clear that out. I look to become a buyer in here. Now you might say, Wayne, this one didn't work, right? This looks terrible. Yeah, you're right. It only worked for 3 months. Terrible trade. Only 3 months of success. Okay. Look, become a buyer in here. Look, become a buyer in here. Hey, it moves sideways till the end of the year. Now, the interesting thing is I follow these up typically with trade plans as well. So there's also a move on the way down. But okay, so this, right, this only went up for a few weeks. Okay, and of course at boot camp, if you go back the last 3 years, I told you to be ready to sell here. I told you to be ready to sell here. I told you to be ready to sell here. Now imagine I told you something similar around here. Okay. Okay. And by the way, I don't even trade USD yen because it's the least performing. That's the worst it was. So anyways, you know, I feel like pulling the plug right now. I don't even know what day of the week it is, to be honest with you. CPI came out, so it's Wednesday. Cool. So I will see you tomorrow, Thursday. Must be, what, the 14th? Or is it the 5th? No, it'd be 14th today, and tomorrow is the 15th, right? Tuesday, August 13th. All right, I guess tomorrow is Wednesday. All right, weird. Okay, anyways. Oh, it was retail sales that came out, not CPI. No, it was CPI. I don't know. I'm not getting enough sleep, obviously. So I got to go, yo. So peace on earth. May the pips be with you. May your profits be above average. Nobody subscribed today in today's webinar. So that's, well, I thank you for being repeat visitors, part of our community. I think we got something very powerful here. Thank you for asking questions and being involved and treating each other with respect. If you need free chart templates, charts.fxbootcamp.com. If you need better notifications of when the webinar starts, twitter.com/fxbootcamp. If you need a trading account, a demo account, maybe you want a 100% deposit bonus, then visit tradersway.com and open your account. And anything else? If you need training, fxbootcamp.com. Yes, that's it. So peace on earth. May the pips be with you. May your profits be above average. There are 4,000 videos on YouTube that are associated with my work. Please watch them all. It'll only take you a year and a half. And then, of course, subscribe, like, and comment. If you're watching a recording, make sure you comment. See you tomorrow, guys.